Good evening all, good morning all. Welcome to Auckland, New Zealand, Black Bull Markets trading floor. Really keen to do a quick market update on what everyone's talking about since the market opened, and that's what's going on in Japan. You had a bit of a delayed reaction from the weekend announcement, but the market gapped. We saw treasury bonds gap higher, the JGBs, following Japan's decision to fix the rate at, I believe, 0.11%, and also to buy 10-year notes at that rate for the first time since February. So pull up a chart here. Let me show you what happened to the 10-year JGBs. We saw a big move to the downside upon the news release, and following that, there wasn't actually much reaction in the dollar yen. That's what happened, a little bump up there. However, since the market is opened, we've seen a big gap up in the 10-year JGBs with full 3 standard deviations away from its highs from February of this year. So big movements there in the market. Notably, you saw the dollar yen fall from its highs of the 113 mark. Last week, it just hit 113, which was pretty monumental, and is now, since the market's open, continued to slide to under 111, catching a lot of traders out who had positioned for further yen weakness offside of the most recent reports from Japan showing short yen positions were pretty dominant over the last few weeks, as well as that with the dollar strength story over the last few weeks. This has really been the trade that a lot of bulls have been looking at. However, on the flip side, with the dollar, with Trump talking down the Fed rate hikes, Mnuchin also coming back to debate that, a lot of uncertainty has caused a bit of a dollar sell-off as well, which has really spurred on this move, which has led from Japan. So for those who missed it, according to media reports last Friday, the Bank of Japan is set to launch a full-scale investigation into the mitigated slide of its yield curve control policy. So that's again a key note that suggests the Bank of Japan may seek to further tweak to the left of the 10-year note, achieving a more of a steeper curve, according to some economists there. So, like in Europe, where the QE and the NIRP yield curve have been pretty flat, it's been hurting banks' profitability, with some banks, most notably, of course, Deutsche Bank, recently complaining vocally about ECB's policies. And similar concerns are now spreading into Japan. Both banks and pension funds are getting pretty agitated with the yield curve steepening. So let's see how it affects banking profitability moving forward. But this change is pretty monumental here. So the question now is, will buyers step into the dollar yen? Absent a statement from Kuroda recently, the answer is probably not, as in theory, considering the 10-year yields are now very close to zero, around the 0.7 mark, the downside is almost pretty limitless. I mean, you also see that in investors seeing the Bank of Japan meeting next week as the live one, really, the game changer, perhaps, with a real possibility of that tradable decision. So look out for more volatility here. For what it's worth, keep an eye on the 110.76 mark today. That falls just below where we're currently operating, following the fall from 111, 110.76 dollar yen. That would really indicate a trend line break on this trend from the low here down to the high. So if you fall beneath that, I'm looking at a lot of area beneath that this pair could fall, especially going all the way down to the 106 mark there. So you've got a pretty interesting dynamic playing out here in this pattern. A break of that 110.76, and then the 110 mark could really signal a move lower here, in the dollar yen, with the yen, of course, appreciating and amid the recent dollar story down to this 106 area. So keep your eyes on dollar yen. Key pair to watch today with several banking companies releasing their earnings this week as well. It could be a very interesting week for US equities, and to see how it plays as well with future talks from Trump and the Federal Reserve on their future rate hikes. Keep in touch with both these markets, dollar yen, key pair today. Keep your eyes on it, and best of luck with your trading. All the best.